Ira Epstein with your financial market wrap-up, and this is for Monday, the 16th of November, 2020, 6:35 p.m. Central Time. What an interesting day. You know, this morning I was recording my subscriber video and finished it. And I turned my head, I turned back on the TV. I always keep them on around here, and at the volume off as I was recording because I'm in front of the studio. So I went there and I'm watching, and the markets are going crazy, and there's Moderna up, coming out with the efficacy rate of 94.5%. Their tests are done. They're turning it over to the FDA, and they're hoping for approval by December to start releasing their vaccine. So now we have two of them. Well, you can imagine the stock market took off. Understand what I said over the weekend. I'll stick with it. The glass is half full. The market is looking at what? The future. We're going to have vaccines. Be they come out for the first line defenders November, December, they're coming. By the spring, most of you will be able to get it. I won't. I'll probably be May because I'm older, and they'll wait for somebody like me to get it. I get it. It's fine. I see what it's all about, and that's fine. Which one should you take? The one that's available to you, probably. There'll probably be more. You know, I heard President Trump's task force talk about it. They think there will be 4 more of them very shortly. So that's great news. Now we're going to have choices. They'll be all over the country, hopefully. Everybody will be making them, and this thing's gone come spring, summer. I think that's what the market's looking at. But you had a huge day today. In unison, you get a big up day on a Monday or a big down day. What happens on a Tuesday? You normally attempt a correction. That's what I'm looking for to happen in the stock indices. The copper market on fire. China's economy is rip-roaring. There's no other description for it. They are just going like gangbusters. In the refineries alone, they produced the most energy. In other words, they refined more oil than ever in the month of October. They're not doing it for stockpiles. If you look at their consumption, what they're doing, and now they have that new RCEP agreement with 14 other countries, you know, they're doing very well. You know, President-elect Biden, he's going to have his hands full trying to figure out what does he do, how do we get U.S. influence back in there, and we'll see what goes on. Bonds and notes. I did a piece today for Bloomberg. It's called TikTok. You know, go on there and their TikTok piece, and you can hear my voice. I did it for them. They published it around 2:33 o'clock Central Time, and it was inflection point in the 10-year note. You might want to listen to it. I'll be on BNN Bloomberg, which is Canada, this coming, I think, towards the end of the day, around 3 o'clock or so, Friday. And I'm going to be holding a live webinar this week. So tomorrow morning, look for your invites. I'm setting the whole thing up in the morning. I've had a busy day today, but I will get to it, and then I'm going to look to do another special report. That silver report right now looks pretty good. In the weekly area chart of closes in the S&P, well, you've gone right now straight up from 3264.75 on a closing basis up to where you're at right now. That's almost, 350 points. Wow, that's pretty strong. I wanted to bring back to you the inverted head and shoulder formation. I didn't think the market should have taken out this part of the shoulder. Some traders use the head. I didn't think it should have taken that out. But as it turned out, when it did, it never really looked back. And when we get rid of that and we look at the charts, the action on the chart is higher low, higher high. Now, this was the action on Friday. And if you looked at my weekend videos, I said I think the market on Friday made a determination that it's going to look at the glass as half full, not half empty, which means it's looking positive. It's going to say we've got the virus under control come the spring, summer. We're going to have vaccines right away. And yes, the headlines right now are terrible, but those terrible headlines drop the market back, or bad economic data that the market will use to accumulate stocks or whatever. Why am I saying that? Because the economic data up until this latest outbreak was very good for America. So we're like holding back a racehorse on a track, pulling it now. We've got the COVID, we know, but eventually you're going to let it go. And then when you hit the whip, and I don't like to hit an animal, I used to ride, you don't hit animals. You can, hit them a little bit like that, but you're not hurting them. You're letting them know you want them to run. What does it mean? Well, it means in plain English, that's the relief. So the whip is the relief. We understand that, the relief money. And President-elect Biden talking about it today. It's one of his first things. He's hitting the ground running. He wants to get something done, which means, Nancy Pelosi, you're going to have to give ground if you want the Republicans to work with you. But that's a positive too. So when we look at the market on the other way, well, you're overall the key moving averages. Let's just go back now to just charting. The Bollinger Bands are up here, higher lows, higher highs, bullish. Momentum overbought. Now there's the stickler. The market does not have both numbers over 80. It's had a nice run. It's near this all-time high. And I know the cash markets are at all-time highs. You hear it on financial TV. You have a small issue here that the market probably is going to decide this choppy affair. I wouldn't be surprised about that at all, but bullish at this point. NASDAQ, same thing, but not overbought. Momentum up, higher lows, higher highs. As long as you don't take out 11,801.75, the market, in my opinion, gets bought on the brakes in the market. And that's a lot of room between where you're at right now at 12,044 to 11,801. I mean, there's a lot of room. So I'm still looking for the pullbacks. Do I think the market's going to get super aggressive in buying? No. Any reading over 70 keeps, I think, the algos and the pros backwards. They'll wait to the market to get under that level. If the market were close to both numbers being over 80 for several days, then I think they get aggressive. In the Dow, overbought, but here's the difference, okay? Both numbers over 80, but let's throw away tonight's numbers because we don't know how Tuesday's going to settle. So we go to Monday, both numbers over 80, not Friday. So you got 1 day of it. You're just plain overbought. You cannot convert the market from overbought to embedding where the numbers go like this. Both stay over 80, ideally sideways, and that often lifts the market away. We're not at that pattern at this point. So if you did get to the upper Bollinger Band, I'd look for the market to see some profit taking, not selling. Very big difference between the two. And on pullbacks, I think as long as the market stays above here, you have a great shot at getting an embedded reading, and that could get interesting. By the way, we saw today that Tesla is going to be joining the S&P 500. Can you believe this is a company 2 years ago, maybe bankrupt, right? Remember all that? Does Elon Musk have any money? Can he get it all? What the company going to do? Now it's in the S&P 500. Wow. And what a great thing he did with SpaceX, huh? All right, lower low, higher high, overbought in the Russell, got up to an area where I think the pros are taking money off the table right now, and they're still friendly. In the VIX cash, you have a higher high and a lower low. There's really nothing to do. The market's trying to build an embedded reading. So let's take a look. This is the close of Monday. Both numbers are underneath 20. Both under 20. Both under 20, not the day before. So you embedded today. If you get a hard rally in the market, what do I think the pros are going to do? I think they're going to sell the market short. That simple. If the market were to hit the lower Bollinger Band, I think they'd write puts, looking for the market to come up. But we'll see what it does. But I think the rally is what they'll be looking for. In the T-bond market, what do we have? We have a higher high, lower low. Nothing. There's no trend. You're just fighting against the 18-day average, searching for the next direction in the market. Same in the 10-year note, a lower low, a higher high. Got right to what I call that line in the sand, that 18-day average, and that's where the market's stalling. I teach this all in my charting course. So for $199.95, folks, you go to the website. It's a great gift for yourself. It includes the charting software, 6 hours of videos, my full research package. That's $60 a month. The software is near $100. Then you get the 6 hours of videos, all for $199.95. A lot cheaper than those other courses out there, and I think better. And as you can see, market fighting its battle. We wait for the next move. Dollar index still in the bear camp. lower highs, lower lows, but oversold. I think getting down to the 93.04 level, a gift if it did it. The market's going to have trouble attracting new sellers with a reading under 30 and both numbers not embedding just yet. Eurocurrency, overbought, mirror image, flip-flop of it. Higher lows, higher highs. A gift if you can get up to the 119.43 area because of the overbought. Embed, and then I get a different attitude on the market. But right here, nah, this is where I think the pros are going to be taking money, some money on the long side off and on the dollar, some short side off. Japanese yen getting another bid in the market, but it's not trending. It's got a lower low, a higher high, playing around this 18-day average. This market had this big, huge drop, and now it's just looking to see what do I do next, and it hasn't made its mind up. Bitcoin, as long as you keep, and this is an embedded reading. Look at the power when you have an embedded reading. This is what you look for in markets. When they're there, they don't have to last this long. This is unusual. But what I am noticing about Bitcoin, it develops embedded readings, bullish and bearish, and they last for a while. It seems to be unique to the market and the type of trader that trades this market. But it's still very much in the bull camp until that's lost. Now the differential, you know, I've got here Dees. I don't even want to do this chart. I should have made this to Jan. I know what happened. I erased all my charts by accident and I called them back. And when I did it to get the show even ready, I had to put in all my Jans. I forgot to do that one. Apologize. In looking at the charts, higher lows, higher highs, I can get them back pretty easy because I keep backups, but they weren't exact backups, and that was the problem. That's bullish. The market's got resistance at the upper Bollinger Band, but it's too overbought to attract me into the marketplace. And today's news, do you think getting vaccines is bullish for energy? Duh. Imagine airplane travelers, they're jumping up and down. Cruise ship people, they're going, bring on those vaccines. You leaving your home and traveling again. We're in Chicago in a voluntary shut-in. I'm telling you, we're listening, at least in the city, but it's desperate. Tonight I was watching CNBC, shows about young children, 2 years old, and what's happening psychologically to them not being with preschool kids and their friends. It's not pretty. Higher lows, higher highs, support probably at the 100-day average. That's going to be something of a pivot number. Back and forth because you're overbought. I wouldn't be chasing this market higher. Heating oil, same thing. And here's a market that literally fell apart. Natural gas. Remember that warm weather I've been telling you about? Well, it's still out there. And each day that goes by, you're still not using that. Now, if you can hear in my background in Chicago, we're 25 to 35 at night. We're cold already, so that's going to move in. And you're probably getting and have gotten too cheap here. But those burdensome supplies, you're not using what you need, and we're still putting too much into storage. So when I look at these markets and try to help you, we have put together volumes 1 and 2, Guide to Technical Indicators with our good friends from Futures Magazine. And this will discuss chart patterns, how you draw trend lines, examples of all this, moving averages, why they're used, what they are. Oscillators, not only mine. Saw an article on Williams percent R today. I mean, you see all the different ones, and they talk about a lot of these. Price-time relationship, the Arun indicator, Elliott wave, options primers, money management. If you don't learn how to manage the money and use it as a filter on a chart, I think you're making a mistake. When I developed my full research package where I give people buy and sell recommendations in writing twice a day, money management is taken into account, and at the bottom of it, I explain from $0 to $600, and I break it into different categories as to what they mean. I went back and time tested it, and it saved my butt more times than not. And there are times when you get a buy signal and your money management says, no, you don't. When all my things don't fit in, I'm not a pilot that goes in the air and then does the checklist. It's all done on the ground before the trade is made. How do you find this and get it? Go to our website under free offers on the bottom right. Sign up for it there. You can call my staff. They'll get it out to you right away. It comes as a link for your PDF. You can print it, do what you want with it. I think you'll find it great. I'm Ira Epstein. Have a good day.